Hello and welcome back to Core Finance for the third of three videos today with Mike Van Dulken, who is Head of Research at Accendo Markets. Thank you very much, obviously, for coming in today, Mike. And finally, we're going to look at the dollar basket, DXY, and what this actually means for trading. Can you just explain this chart, because we've also got volume on this chart, is that correct?
Indeed, yes. This is volume across price, so we can see how much trading activity there has been at any given one point. I've only gone back the last 2 weeks because this index doesn't actually move but by way of magnitude as much as we know. We only really need to look to the near-term hurdles, i.e. the lows of yesterday from which we have bounced, and the highs back towards the middle of the month around 7.4. But for the moment, there is potential here. This is potential for what we call a bullish flag pattern. We have a sharp up move, a bit of consolidation, pullback, and then potential for a repeat of the up move, which could take us back to, what's that, 92.8. Now, why is this interesting? Most commodities are denominated in dollars. A stronger dollar makes them a little bit more expensive for us to buy if we're changing our pounds into dollars, for example. And furthermore, a lot of the Footsie is dollar sensitive and commodity sensitive. So we have here a bit of a conundrum for the Footsie because a lot of commodities involved, but a strong dollar can help offset some of the recent sterling strength, which has actually been a hindrance for the Footsie. And as I said in one of our other takes this morning, it can depend how the Footsie wants to take it. A weaker dollar, they embrace it, makes commodities all cheap. But by way of that, it also means a stronger pound, which can decrease the value of the dividends, which are
when they bring the profits back home.
Exactly. Yes. Not just for the companies, but the income for income investors. Don't forget, a lot of the Footsie is based on income investment. You know, big yields. If they're paid out in dollars or into euros, they're worth a bit less every time the pound strengthens. So at the moment, I think the Footsie is liking the fact that the dollar is actually a bit stronger. It hasn't impeded commodities overnight, which is an interesting point. So if we do see potential for that move to continue up towards 93, obviously going to push the sterling lower. So I think they're going to be embracing it more from a standpoint of a weaker pound than they are seeing it as a hindrance by way of a stronger dollar. So that could actually, if we go back to the Footsie chart we looked at just before, that could actually be the fuel that takes us back to the near-term target on the Footsie.
Understood. So there's a lot of read across there. So don't just look
at a lot of
chart,
drivers. Yes, I mean,
also look at what the dollar index.
As much as technicals can be said to take everything into account, I think it does always. It's worthwhile paying credence to the myriad drivers that are impacting the index at any one time.
It's a very good point to note that a lot of the markets are interconnected.
Absolutely,
very much so. Look for confirmation away from the original product.
I think it's a very good idea to do so.
Super. Mike Van Dulken of Accendo Markets, thank you very much for joining us today.